Hey everyone, Coach Investor back to another video for today. So, controversial topic, right? To talk about cryptocurrencies right now after the whole FTX scandal. Now, I would like to say one thing first. If you have any cryptocurrency, doesn't matter on which platform, on which exchange, take it off the exchange. It's rule number one in crypto. Never leave your money on an exchange or your coins or whatever. Never do it, because in just a matter of seconds, they can block it and it disappears and you've lost it all. Now, about the current situation, there are obviously some winners out there. Binance being one, since, well, I do believe that this whole thing was to kill off FTX and Binance becoming a bit bigger. But Coinbase being, in my opinion, the most regulated platform and exchange out there, and a US company which I trust way more than some other company, especially Binance with a Chinese founder, and FTX with, well, every flaw that was attached to it. I do feel more comfortable having Coinbase than any other platform. Of course, I'm a bit biased because I do have shares of Coinbase, but other than that, that's about it. I don't have any other crypto exposure out there. I just have Coinbase because I do want exposure to maybe a possible positive crypto future, but especially a blockchain one. Now, before we jump into the earnings call and some numbers during the earnings report, this is what Coinbase CEO and founder Brian Armstrong said. So Coinbase is seeing good inflows and activities on the platform. As you can probably imagine, he's talking about, well, everything that is happening with FTX. We're definitely seeing increased activity, which obviously in the recent quarter, since we're in a bear market and a crypto winter, activity, monthly active users have been going down. So, as they say in Dutch, one's death is another one's bread. Coinbase might be winning here as well. Now, before I go over some points that were made during the earnings call and go over the earnings report real quick, if you want to support me and this channel, first of all, maybe hit that thumbs up button and subscribe if you have not, and maybe check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Make sure to check out all the other links in the pinned comment as well. A couple of points, well, maybe one major point here that was mentioned during the earnings call is, first of all, with regards to the positive thing from this report, which was the subscription services that grew 43% sequentially to $211 million. And importantly, if we do hold the price constant, so if Q3 prices were the same price they were in Q2, that would have grown 82%. The biggest contributor within this line item is interest income, which is benefiting from the rising interest rate environment. And now with regards to the operating expenses, so they took very decisive action on cost and they're able to reduce the operating expenses by 38% sequentially, or 22% when you back out the impact of non-cash impairment charges on their crypto assets. Coinbase, like many other companies, is also laying off employees. So that's obviously also part of the cost cutting, less SBCs, less salaries to be paid. But it's important to know that they have plenty of cash. They ended the quarter with $5.6 billion in total US dollars resources. In addition, they held a portfolio of $483 million in crypto assets, so around $6 billion. And now with regards to the outlook, so for 2022, the full year, they remain cautiously optimistic that we will be able to operate within the $500 million adjusted EBITDA loss guardrail that we previously communicated. This is assuming the market cap doesn't go down and to deteriorate meaningfully below October, and we don't see any changes in the customer behavior. Of course, some things changed since they mentioned this. The FTX story. Now, of course, the crypto market has come down, but probably there's more activity right now. Higher volume of selling, obviously selling and buying. But there's also the positive, the fact that, well, a lot of people are just going away from FTX and maybe even Binance, BlockFi, you name it, and going towards Coinbase. So you might see two sides of the coin. Now, with regards to a couple of points during the earnings report. So monthly transacting users were obviously down quarter over quarter. It's been down since Q4 2021, to be honest, to be expected. Trading volume is also down tremendously since that same quarter. Assets on platform also down, but it did increase from Q2. Now, as for net revenue, well, to be expected. barely anything compared to Q4 2021. They're now at $576 million. Then again, you can see that during a bull market, this company is, I wouldn't say printing money, but pretty close to that. So net income back in Q4 2021 was 840 million. Right now, it's negative 545 million. Adjusted EBITDA sits right now at negative 116, which is a bit better than Q2, but still nothing compared to that peak in Q4, $1.2 billion. Now, as for cash, well, obviously it has been coming down, but still plenty of it. Now, when it comes to trading volume, it's not just retail that is trading probably less, but it's also institutional. So right now, this quarter, $26 billion retail, $133 billion institutional, which is much less than the previous quarters. Obviously, with the price coming down, the trading volume comes down as well in a billion-dollar metric. Trading volume as a percentage of the total, we're still seeing Bitcoin at 31%. So that's okay. Ethereum has actually increased quite a lot actually since Q4, basically doubling. Then other crypto assets have been coming down. So more and more traders, let's say, are fleeing towards those no names, Bitcoin and Ethereum. And as for assets on platform that increase quarter over quarter, big decrease year over year. And maybe because of everything that's happening right now, you might see an increase for Q4 as well, remains to be seen. And this was basically the big positive of the quarter, subscription and services revenue. Again, it's still a small aspect of the business, but if this aspect can continue to grow, subscription, which means you can maybe better model the future of the company because this is recurring revenue and not really that dependent on huge market fluctuations, then maybe this will become a bit easier to invest in. Right now, as you can see here, of course, blockchain rewards have been coming down, custodial fee revenue has been coming down as well, but then interest income that has increased quite a lot year over year, but quarter over quarter as well. Then the overall here, obviously with a big push from interest income, overall it increased quite nicely. Now again, this might continue for the next year or two or something like that because of the high interest rate environment we're in. Once that comes down, keep an eye on what is happening here, especially the interest income that might be coming down. Well, will probably be coming down, but keep an eye out on the subscription side. And so to conclude, if you're looking for a crypto exposure in your portfolio, but you don't want to pick one specific cryptocurrency, then yes, maybe Coinbase is the way to go. Again, it's extremely risky, never know what might happen, so keep that in mind. To me, it makes the most sense to go with Coinbase. It's a US-based company. It's pretty regulated. Yes, maybe, crypto shouldn't be regulated, but I'd rather have it being regulated a bit than not at all and lose all your money. So those are my thoughts with regards to Coinbase, with regards to over the situation right now. Obviously, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next one. Bye-bye.